just about a boring talk. It is not going to be a boring talk. The session is like giving you a simple map to build a strong and long-lasting business. Today, having a great idea is just the first step. To make the idea grow, stay strong when things get tough, and handle changes in the market. That is where being smart with your money come in. We are going to look at how being good with money and making your business last go hand in hand. The goal of the session is to help each of you as a young business owners to put those ideas into the business right from the start. So before we really get going, I want you to think for a moment about your business dream. What once money challenge you have faced or once you are worried about for your business? Keep that thought in your mind as you go through the today's session. I promise to give you a tool to not just fix those problems, but to stop them before they even started. So so why are those ideas very, very important? Normally, when we are talking about the foundation for making building a successful um, financial discipline, we have to look at the core three things. We have to look at it from the aspect of the something I call the heartbeat. We have to look at it from the mindset, and we have to look at it from the bridge. So, like I said before, why are those ideas so important? I want you to think of it like being smart with your money as the heart of your business. Just like a healthy heart keep a person alive and strong, good money management keep your business alive and growing. So it is not just about counting money or checking your bank balance. It is about making every single naira, every single dollar, or whatever currency you use, work hard to help your business grow and stay strong for a long time. Here is the scary part. There was a study that was carried out in the United States that is a study by the US Bank or that was actually found that 82% of small business fail because they run out of cash. This is not because they don't have the good ideas or the passion. It is often because they were not smart enough with their money. Your passion is the fuel of your business, but being smart with money, make sure that the fuel is used well and doesn't run out. Of course, making your business last, that is the aspect of sustainability. On the other hand, it starts with how you think. We have to repair back to and reflect to our thinking. It means looking ahead. It also something that I can categorize as a means of maybe looking at it at this angle. Let's say a business that truly lasts isn't just about making money today. It is basically built carefully to grow, change easily, and stay strong for many years. It is not about building something that can handle market up and down, new technologies, or thought competition. I want you to think at it as from the angle of about maybe let's say example like the big companies like the Coca-Cola, the IBM, they have been around for a very long period of time because they have built a long-lasting ways of doing their business, not because of quick wins. We are in the habit that whenever we wanted to start into business now, we are always looking at how quickly can we be able to generate money from that particular business and start investing in necessary. There are some people that today they will build a successful business. The moment this business started doing good, they will start to take the money of that business and start doing whatever they want, which is also part of the key things that is killing businesses in those days. As a business owner, you start doing your business is running good, everything is running smoothly, and then you just start to withdraw the money anyhow from the business and keep spending like just water or something. I can categorize like that. So that one is also part of the aspect that we are also going to look at as we keep our discussion today. So why is it very, very important? It's very important because as young business owners, we often start with less money. but you have a big dream and a lot of potentials. The jump from a good idea to great company is built entirely on a careful money control. Without having careful money control, even the best idea can fall apart because of bad money management. You can have the energy and the vision, but being smart with the money give you the structure to turn those vision into something real and lasting. So if I'm to ask question, how many of you currently have a simple plan for your business money, even if it is just a basic list of what you can spend and earn? Just like to give us a kind of a basic question like that actually. So I don't know, maybe I will prefer to have a kind of engaging session, but later we are going to come back to answer this question after I done with the presentation. So what exactly do you mean by financial discipline? We are getting there actually. It is a phrase we hear a lot, but let's break it down into simple steps you can actually use. Firstly, it is about always being in control. This means actively watching your money flow in and out, carefully tracking every single expenses and sticking to your budget without making exception. It is something you do once a year. It is a daily. It can be something that you can do maybe once in a year. It can be daily, it can be weekly, it can be on monthly basis, and you can even make it your own habit. So let's imagine a pilot flying a plane that they don't just check the control when they started. They constantly watch and adjust. The same thing is also applicable to our businesses. Your business money need that same constant attention, especially with all the digital payment and the online transaction we are actually having today. Let's start with a common example. In my own work of helping business, we use technology. We have seen many startups, the ones that do well, and even when times are very, very tough, and the one that don't just know the monthly sales. They also understand how much it costs to get the new customer, how much money a customer bring in over time, and how many customers they lose. What I wanted to say here is that they have been in control of regulating, checking, and ensure that everything that has to deal with their business is running smoothly. So that is something we categorize as being in control. That is the aspect of regularly checking your online tools, the subscription, to cut out the one that you don't use, getting better deals from your suppliers. It is also about spending your money wisely and making it last longer. You may have 1 million naira today, but if you are not careful, within 2 hours, that money will actually be gone. So it is all have to be it is basically it is part of the role of financial discipline to teach us how to spend well and how to even utilize the available resources. Not all It is not always about money, because sometimes we tend to deal with asset. You may have an asset that you are managing. You may have something very, very vital that if you put it into market, it will bring you money. So it entails all modern such kind of stuff like that. Second, this is also a very another super important aspect for any business: separation of concern. For any business owner that wanted to keep the business actually very active, and for them to be able to sustain that particular business, they need to keep the business money separate from personal money. This is also part of the common mistake we are making. Sometimes, if you ask a business owners, they use personal account for the transaction. Yes, it is easy, especially looking at it from the aspect of compliance, especially in those days, whereby opening account, doing this, doing that, tend to bring a lot of headache. But it is also very, very wise to not be combining your personal money with your business money in one account. If you are doing that, definitely you are lacking financial discipline. So there is also a rule that I think is related to that. The rules categorically state that never ever mix your personal money with your business money. If you wanted to monitor your finance effectively, try to separate the two. Your personal money should go to one account separately. Your business account, your business money should go to another account separately. If you are doing that, you are practicing a very good practices of what financial discipline. So, like I said earlier, this is one of the common mistakes, especially when we are just starting out and it is maybe easy to blow all those kind of lines. So when you mix them, you can clearly see if your business truly is healthy or even financially. So this is make it like a kind of impossible to make the smart choices about the aspect of the taxes, the investment, or even knowing if you are actually making the profit. The first thing you should do is to operate a separate bank account for your business. Get a business credit card and keep all your business and personal spending completely separate. This is not just about a good idea, it is a legal and a tax requirement as your business grows. Because sometimes we tend to look down to the small business that we are actually into. You come into the business, you are not be you are, whenever you come to establish a business, literally you have to look at it from what the business will become in the next, let's say, 5 to 10 years. So if it is only when you are looking at it up to that level, you can be able to actually plan well and ensure that even for the future circumstances that may come as regard to your business operation, all what is expected is actually maintained. Finally, it is about smart spending. This is the skill of knowing the difference between things you want, like all those kind of, when I talk of things you want, I mean like the kind of things that we have, like example, all those kind of luxury stuff and other stuff like that we tend to actually deal with in our day-to-day circumstances, and the things you need. If you wanted to have a very good financial discipline, there is need for you to clearly differentiate between the things you want and the things you need. If you cannot be able to differentiate between the things you want and the things you need, definitely you cannot have a very good financial discipline. Because at times we end up spending unnecessarily. You just go and be spending money anyhow, like that. That is what, in the names of what? In the names of the state of luxury. We have so many people that have such kind of habits, especially when they are into business is doing good, they will start to remove the money that they are generating from such kind of business and begin unnecessary spending, which is also part of the key contributing factors that is killing businesses, especially at the startup level. Nobody is preventing you from spending your money. It is your hard work and money, but make sure that you maintain financial discipline in the process of spending such kind of amount. So like I said, it's very, very important for you to differentiate between the two. When we are talking about the things you need, we are talking about the aspect of investment that you actually bring into the business for you to bring more money into the business as well. You know, as you are, let's say you are into car business, the business is doing good, everything is running smoothly, you begin to look at what are the possible way you can actually expand such kind of business. So you can take the profit or the money, the profit you are generating from the car business, and put it into the maybe real estate business. You see, that one is a kind of what additional investment, expanding the business to bring and unlock more opportunities for you and your businesses as well. But if you are just taking the money, you are not investing, you are spending them without gaining any profit in return. That means definitely is something that we actually have to reflect on that and see how you can bring something good that will bring that will correct such kind of habit. So every time you spend money, you should ask yourself this question: will this directly helping me make more money, cut the cost, or make my customer happy? If the answer is not clear, then you have to think again. For example, now let me give you a common example. A fancy copy machine for your office may be one, but investing in a good system to manage your customer contact, like the CRM or the strong cybersecurity tool to protect your online information, is definitely a need. You need to differentiate between the need and the want. the needs are the necessary things that we need for us to establish and ensure that our business run in such a way that everything keep running smoothly. The one they are not something that is necessary for the execution of such kind of business operations. So learn to differentiate between these two. A minute, please.
abu na a karka bu mana ta angwarin fa yau waje ka yanzu
Sorry.
lawai
So how do we master the aspect of cash flow as part of the aspect of financial discipline? This is also very, very important. We are going to be talking about um, something I describe as the lifeblood of your business. Because if you wanted to have a very good business, a very successful business, you need to learn how to master the aspect of cash flow in your business, both the inflow management and the outflow control. All of them are very, very important in business. So that is why I have given it a name, lifeblood of your business. Cash flow can actually describe as that. So you have probably heard of the saying, cash is the king. A lot of people have that kind of saying. Cash is the king. That is true. But I want you to add something important. Flow is the queen. The cash is actually the king. The flow is the queen. So profit is basically obtained not just a number on paper, a calculation of what you have earned, but in cash. The actual money in your bank account is what keeps your business running for day-to-day activities. You can look for you can look at it from this particular angle. You can look at it from this angle actually, maybe to say that you look profitable on paper, but still you go out of the business even if you don't have enough cash to pay your bills. This is a very, very important difference that many new business miss, especially with quick online transactions. One big problem many business face is the timing gap. Very important. This is the time difference between when you spend money on supplies, on product, or on running your business, and when you actually get paid by your customers. For example, a company that make things may actually pay for material today, spend weeks making the product, and then wait for like let's say 30 to 60 days for customer to pay after they have received it. That is a long time where money is actually going out but not coming in. In digital world, this could be delay in getting paid for the online services or subscription. To handle this, you need to find a good balance between the money coming in and the money going out. This means using smart way to get paid faster by your customer and clearly managing your bill when you pay your own bills as well, without upsetting your suppliers, because in so many business aspects, there is so many aspects that we have to consider. Part of it entails having a good relation with the customer and the suppliers. If you don't have that, your business can also thrive actually. The main goal is to always have enough cash available to pay whatever you owe, so that even though you have made a supply to the people, they have not settled you your money, the business will keep going. If you can actually make a supply and you have to set off until when the client pay you before you now come back and produce another one, definitely you have to consider your business and see what you can actually put in place in order to control that. So the simple ways to get the money in faster for digital business too is actually very, very important. Part of it entails I think I have about 3 things here, which has to deal with the aspect of offering small discount for your early payment. You could say maybe pay within 10 days and get 2% off. This one, it could be encouraging to the people that you're actually making the supply to, for them to actually pay. If you pay within 10 days, you can get 2% off. This is to encourage the customer to pay quickly. You can send invoice and reminder automatically. Use softwares to send bills, right, and then send a gentle reminder if the payment are late. This is easy to do with a lot of digital advancement that we are having. There is a lot of online tools that can help you get paid faster. Be clear about payment rules. Very, very important. Make sure your bill clearly state when your payment is due and how customer can pay. Is it going to be is it that the payment is going to be done in cash? Is it going to be done online via online link? There has to be a clear distinction about your payment rule whenever you are accepting a payment from your client. There should be no confusions or other compromisation of standard when it comes to the aspect of making the payment. You are also expected to ask money upfront. Yes, this is very important, especially for a bigger project or services that has to deal with some large amount of money. That's why it's very, very important for a bigger project or services to ask part of the payment at the beginning. This will help you cover your initial cost. Like, for example, let's say you are a software developer. You can't just go to a software developer and tell him, please start designing, start developing this site for me. After you have done all the site, you have deployed it for me, I will pay you the money. It's not done that way. At least if the client is very, very serious, you need to make a deposit of at least 50% of the total amount, or it depending on the nature of agreement you have with such client. But ideally, the initial deposit should be to about 50%. That is before the take up of the project. So it is also very important to look at it from the aspect of smart way of managing all those kind of digital product that we tend to buy and purchase online. Sometimes we tend to buy in book. Sometimes we centralize. Sometimes we talk about the aspect of the suppliers, the time it takes for the good to be supplied, all those kind of stuff like that. So let me start by looking at it from the angle of taking to the supply about the payment times. You need to have a very good relation with the people you buy from. Sometimes they will let you pay. For some people, they can give you good and services and let you pay maybe in 60 days instead of maybe 30 days without extra charges. This apply to your software providers, the cloud services, and the online marketing partners that you have. You can look at it from the aspect of buy-in or centralized purchase. If you buy a lot from one place to another, you may get a better prices or a better payment terms. Think about combining your cloud hosting or software license together, as the case may be. Don't keep too much stock just in time. Very important, please. Try to get a product or material only when you need them. Don't just go and buy something and come and keep in the name of, you have seen what happened to all those kind of coins that people are buying, right? Before they tend to be very expensive. Now they have gone low. So it's very important to know what you keep. Make sure that all whatever you keep in stock, you keep it in such a way that it is something that you actually wanted to trade for an exchange, or you wanted something that you wanted to sell. This is basically part of the preventive measure that stop your money from being tied off in the things that are just sitting in the warehouse. For digital product, this means using your online resources effectively and not paying for more than what you need. So now let's talk about the aspect of sustainability as part of the key pillar for the business. So after talking about being smart with the money, it is time for us to move into other important idea, which is about the aspect of making your business last. That is why we tend to talk about the aspect of sustainability in business. First, you need to manage your finance. You cannot manage your finance if you don't have financial discipline. We have discussed the strategies and taxes in terms of that. It is also very important for us to discuss the sustainability field. How do you sustain the business to keep it running, even with the ups and downs that we tend to face? How do you keep the business running? So that is actually what we are going to look at it here. So, like I said earlier, making your business have a kind of sustainability is something that will lead us to talk about a business lasting. We are basically talking, when we are talking about the aspect of sustainability in business, we are looking beyond just making a profit. It means running your business in a way that meet the today's need without causing problem for the future, either for the future generation or for your own business down the road. It is about building something that has a long life, make a good impact, and grow responsibly in our digital world. For a business to truly last, I believe it needs three main parts. Yes, you may have heard of the triple bottom line. That is where we tend to talk about the people, the planet, and the profit. And the profit. For our talk today, let's think about them in a slightly different way. We are going to focus on how they affect the business every day, especially in the digital economy. So the first one is the money sustainability. That is why we tend to talk about the economics of the money. This is the most basic part. It is basically about always having enough money and making a steady profit over the times. If your business isn't making money, the other part can't stand strong. This means having different ways to earn money, which sometimes can be categorized as obtained online, keeping your low cost of running the online tools and the automations. And of course, saving enough money for a third times. A business that always lose money, no matter how good it is in terms of idea or online services, they cannot be able to last. So whenever you are going into the business, whenever you wanted to start a business, to think about it from the aspect of sustainability of that particular business. Can I be able to continue sustaining the running of this particular business? All these are part of the key things that you have to consider before you even start the business. Don't go and start something that you cannot finish. The moments you wanted to start a business, yes, it's good to have the idea, but there are some ideas that at the long run, issues may come, which will bring a problem that has to deal with sustainability. So you have to look at such kind of stuff to see what are the necessary things you can actually bring in for you to do something that will go in line with the goals and objective of that particular business you are talking about. The second part is how your work actually go. That is why we tend to talk about the operational of nature of the business. This is about how well your business run inside. It means having a system that don't waste your resources, don't let your technology get all too fast, and most importantly, don't burn out your employees in the names of taking the process or sustaining that particular business. A business that need its owners or staff to work 80 hours a week all the times isn't going to last, definitely. Don't overwork your employee. Don't put a lot of pressure for them in the names of you wanted to get a result in business. Start moderate and ensure that there was a balance. You see, our brain tend to bring more ideas. We tend to have much more ideas if to say we used to have enough of what? Enough of rest and enough of what? Balance in terms of the way we work and other activities that we tend to carry as part of our day-to-day activities. So this means having a system that can grow easily, like using a cloud service, a clear state of how things should be get done. We are now in the era of automation. Almost everything is going into automation. Try to use technology to automate your business in such a way that even if you are not there, let's say you travel outside of the country, the business will keep actually running. We have all those kind of smart way of automating our business nowadays. Try to see how you can obtain especially in the era of this artificial intelligence, AI. Every day we talk about AI, we talk about AI. Yes, AI is there, and AI has come to stay, whether we like it or not. So for that, we have to start taking advantage of it to see how we can also integrate it into our core business operation for us to automate things. Yes, all those kind of boring stuffs that will make that will stranded your staffs and make them feel boring. You need to automate them. We are in the era of technology. This is 2026 now. So the third one is community and environmental sustainability. That is why we tend to talk about the social and environmentals. This is about your business being a good neighbor in the digital world. It means building the trust with your customers and community, trying to reduce your impact on the environment, like using lesser energy for your online servers, and making sure your business has a positive effect on the world around it. This could be um, this could actually means maybe buying the product ethically, reducing your carbon footprint, helping local communities, or having a fair and a welcoming workspace. Today, customers, especially the younger ones, really care about this. A study by this person, Nielsen, showed that 78% of people in the US think a sustainable lifestyle is important. So it is not just about the right thing to do, it is also good for the business and a brand in digital economy. Now that we have talked about the building a lasting business, now let's learn how do we protect it from unexpected problems, because along the way as you keep to run your business you have to expect problems, you have to prepare for the worst because you don't know what is actually coming. So like I said earlier, we have already discussed the aspect of building the business and the last and how can we be
Hello?
able to keep the business sustainable.
Please.
What matter the most now is how to protect it
Please
from
stop.
unexpected problems, especially
Please stop.
for some of the unique challenges that we actually face while running our business. We need to build
Please
a
stop.
financial fortress. This fortress, much like a strong cybersecurity wall, has three main
Hmm?
defenses, each designed to handle a shock and keep your business grow. First, you need to look at it from the aspect of emergency. Yes, emergency reserve. This is your safety net. A strong suggests keeping enough money aside to cover 3 to 6 months of your business cost is very important. This money should be easy to get, like in a separate saving account, and it is for unexpected bad times, like a sudden drop in sales, a big unexpected bill, maybe for upscaling the cloud services, or a long period where there has to be maybe money is not constantly coming, something like that. Think about the era of COVID-19 pandemic. Business that had a good saving were much more likely to survive and adapt than just living paycheck on the paycheck. It happened during era of COVID-19. We have seen the importance of what? Of business that have a good saving plans because they save a lot. And even after the post COVID-19, they now come back and return to operation in a stronger way, even though they are also affected. But as a result of good saving habit, it actually saved a lot of business during that time. Secondly, is the aspect of managing the debt wise. Very important. Debt. When we are talking about the aspect of debt, we are talking about the borrowing, the aspect of borrowing money. Well, debt is not always bad. It can actually help your business grow faster, but you must use it very carefully. Use borrow money as a tool to grow, like investing in new equipment that will make more product, or expanding it into maybe, let's say, a new market that will bring in more money into the investment. Don't use it as a coach to just cover your basic running costs because sales are slow. For example, taking a loan to buy a new smart technology that will double what you can produce and cut costs by 15% is a smart debt. But borrowing money just to pay your staff because you are not selling enough is a big warning sign. Take note, please. Always, always figure out if the money you borrow will bring you more money back. That is why we tend to talk about the aspect of return on investment before you can take that particular loan. It's good to take loan to expand business, but always think of it, especially at the early stage of your business. You need to look at it to see this money that I wanted to collect. If I collect the money and put it into the business, will it be able to bring more profit to my business? You also need to set the target for that particular debt that maybe you are planning to collect to put into your business. The third one is a clear plan for reinvesting profit. This is where you as the business owner need to make a clear choice about what to do with the money your business make. How much you had earned, the aspect of the profits that you pack back into the business to help it grow more. It's also very important. You need to also compare it with how much you will take out for yourself or as a dividend in some businesses. Putting money back into the business wisely is what makes it grow big and strong over time. This could mean investing in new ideas, spending more on online marketing, upgrading your technology, hiring key people. A common mistake for new business owners is taking too much money out too soon. This basically part of the key thing that stops the business, and it is basically what need to look in and put into account. A balanced approach is actually proposed at this angle. A balanced approach entails an approach that gets some reward, but your business also keep growing, especially in the fast changing digital economy. If I'm to give you an example, let's say imagine a small but fast growing online clothing store as our case study here. Instead of taking all the profit, the owner decided to put 60% back into the company, then use his money to hire two more social media marketers, invest in the better e-commerce platform, and run a special online ad campaign to reach new customers. This smart move within 18 months lead to about 45% increase in their customer base, a 35% faster way to handle customer issue, and a 50% jump in regular sales. So this is basically to show you that putting money back into the business can bring much more bigger reward than just taking it out right away. At this juncture, we are going to discuss some of the common financial pitfalls that we have to avoid whenever we are going into the business. Even with the best plan and the most passionate business owners, there are some things that can actually go wrongs, and that is why we are looking at it from the angle of how can we able to manage this such kind of inconveniences that may happen. So let's look at some of the common money mistake. You can see them and avoid them as well. The one big trap is growing too fast. Very important. Growing too fast. This happens when business expand quickly before it is basic setup, it is system, how it does things, and especially it is money control are much more stronger enough to handle the speed. It is like trying to build a very tall building on a weak foundation. So many people have the habit that the moment they start business in just maybe less in some, even if they don't care, or even if they say it's just in a single day that the business will bring more profit to them, they don't care. One thing about starting a business is that it is not an easy journey, right? You have to nurture the business. You have to take some time before you start seeing the impact of that particular business. So stop thinking that you start business today and in the next 1 year, yes, there are some business that are, yes, we can have a lot of growth in business. That one is actually part of depend on you and the nature of your business, as well as the good practice you have put in running such kind of businesses. But aside of that, it is also very, very important to consider like a kind of long period of time before you start measuring the success of that particular business. So you may get a huge order of a sudden rush of the customer, but if your ability to make such kind of product, deliver them, or help customer can actually result into a problem. Another common mistake is pricing the product or service that are too low. Yes, many new business owners are eager to get customers. They don't actually fully count on their costs. This includes not just being direct about the aspect of the cost making from that particular business, not also including the hidden costs, the value of their time, the money needed for future growth. This lead to what we call busy but struck problem, where you are working constantly but not actually making enough profit. You may be selling a lot, but if your profit margin are too small, you are basically working for free or even losing money on each sale. So it is super important to understand your cost of goods sold is very, very important. All your running expenses and to add a healthy and a fair profit margin to your businesses, especially for online product and services where it can be very, very tricky to know the true value. Finally, and perhaps the biggest mistake, ignoring your numbers. Very important. If you don't regularly look at your financial report, especially your income statement, which show you the profit and the losses, your balance sheet, which show you what you owe and what you earn, at least once a month, try to look at through all of this. If you're not doing that, then definitely you are basically running the business in a blind way. These documents are like they are very, very vital when it comes to the aspect of running a sustainable business. We are going to take some time to look at the tools for modern entrepreneurs because, like I said before, we are in an era of technology. We are in an era whereby almost everything can be automated. That is why a lot of people are looking at it in such a way like the technology is going to maybe get their jobs, which is not done that way. So we are very, very lucky in today's digital world. You don't have to manage all this complicated money stuff with just a pen and paper. If you are still recording your transaction and the flow on a paper, then you have to reflect on yourself. There is a lot of um, technology that you can adopt to help you in managing all those kind of aspects of finance. And I see no reason why you have to keep punishing yourself using pen and paper for you to record um, sales and the transaction of your business. That one is an all method strategy. We have already gone far beyond that level actually. But some are still doing it. They may have their reasons. I believe that and I also respect that. So like I said, all those kind of many stuff, we are in an era whereby all those kind of paper and pen stuff is no longer actually putting into account. We have amazing digital tools that are made to help modern business owners like you to be smart with money and help you build a strong digital economy. Your first most important step should be digital accounting programs. Very important. You have to move away from the all paper ledger to online software like the cookbooks, the Zoho book, OF. This is not just an easy. It make the work to be more efficient. There is an accuracy in the work, and there is a lot of other stuff that you can actually rely on for you to have a successful business with the help of the technology here. The programs are automatic and actually track your money, reduce your mistake, and give you real-time insight into how your business is doing financially. They can connect you to bank account, sort your transaction, create full report with just a few clicks. This technology save you a lot of time. So you can focus on other ideas and the other aspect of operating the business while the technology is handling the aspect of the inflow and the outflow of the money there. Next, I suggest you use a budgeting apps. Very important. Beside the aspect of having the generalized accounting software, special budgeting apps or features with your main accounting program can help you track every single expenses as it happens. Till like the Mint, the YNAB, or even a well-made online spreadsheet can give you this kind of detail in control. You can get a data analyst to actually sit down and design a dashboard for you that can track each and every cell of your business and help you manage your budget efficiently. It's not something that will have to require much something expensive that you have to go and host a software, go and do this. Even with the Excel, you can actually achieve that. You can achieve that with the spreadsheet, of course. So this is going to give you like a kind of a close watch and help you find small money leak, spend your money better, and make sure that you stick to your budget for things like marketing, running costs, salaries, all of which are very important in the digital economy. Finally, using the digital tools um, together to help you make a decision. That is why we tend to talk about the aspect of data driven decisions. By carefully looking at the report your accounting software create, like the aspect of your profit, your loss statement, your cash flow statement, your balance sheet, you can clearly see which product or which services are making the most money, which online ad are giving you the best result, and where can you cut costs without haunting your quality. This is a big chance. It basically give you like a kind of a great changes that don't just maybe give you like a kind of guess changes anymore. It's not something that you don't have to actually guess. It is something that is of true of its value and it is nature. It is there. Everything is real. You can track everything, and it can actually scale off and give you more profit compared to say to the people that maybe that are not longer watching it. For example, if your report clearly show that a product A, for example, a product A make 20% profit while product B only make 5%, you know exactly where to put your effort. This kind of smart analysis is the secret of success in digital economy. We have a case study here I actually designed, which we are going to look at it to look at the aspect of financial discipline and reliance in action. This was a kind of local bakery that made special cake and bread. When the big global health crisis hit, people stopped coming to their shop overnight. Many similar business had to close because of what it is catastrophic. Business are not allowed to operate in that period of time. They are not allowed to operate their shops at that time. So how does this particular bakery survive the event and do well? um well, they basically survive because they have a strong money discipline. They had wisely saved money for emergencies, they manage the debt carefully, and they deeply understand how their money flow in and out. This is strong money foundation, and that is basically what allowed them to quickly change their business. They started taking orders online, set up a local delivery service, and even sold DIY baking kits. Their solid finance base give them ability to invest in new online delivery system and targeted online marketing instead of maybe being stuck in fear. This quick change is the perfect example of how to adapt and succeed in the digital economy. The main lesson for this particular case study is very, very clear. Business that run efficiently and have a good cash saving are the one that can quickly change, adapt, and not just survive, but thrive when big problems happen. They have the financial space to try new things, come up with new ideas, and even grab the new opportunities that appear during the tough times, especially in the event of changing digital economy. So the biggest takeaway is that being smart with your money give you choices, not just being smart with the money lead you to desperation, whether you like it or not. When your business money is in order, you have option. You can choose to invest, to change direction, to grow, to make more solid money. But if you don't have money discipline, you will often be forced into quick bad decision. It is the difference between being in charge of your future and just reacting to the problems. We are literally coming toward running up the session. We have covered a lot of important ground since from our discussion, but knowing things without doing anything is like a kind of wasted potentials. So I'm going to give you a kind of action plan for tomorrow. Three immediate. You need to have a kind of clear action. This one is going to be a three immediate clear step you can take to start building your own strong financial fortress and to actively help grow the digital economy. The first one entails separation of your accounts is very important, please. I have talked it before, and I'm also bringing it also as part of our action because I know a lot of us are into this. Yes, we don't have a separate account that we normally use to keep our business inside. We tend to use OP. Whenever I wanted to buy a product from somebody, you say, just remove the zero and send me the money. You're not doing wise. Except if that OP is dedicated purposely for your business. You need to separate the account. Very, very important, please. If you haven't done, it's very, very important you should do that. Open a separate bank account for your business right away. This is a must do. Make sure your business money and personal money are completely separated starting from today. This simple act will make your will basically make your accounting much more easy, simplify your taxes, and most importantly, give you a clear true picture of your business financial health, which is the key for any online business. Secondly, audit your expenses. Check your spending carefully. Look closely at all your business spending from the last 3 months. Go through every single item. Your goal is to find and cut at least three unnecessary costs that don't have direct help to the aspect of running your business. This could be online subscription you don't use, buying too many OP supplies, getting better deals on service contract. Always remember, every dollar you save is the dollar you earn. And it is directly going to help you in terms of contributing to the profit making in such investment. Third one, schedule your money review. Very, very important. Put a regular financial review meeting on a calendar. I know it's difficult, but I'm saying it. Try to give it a try. I'm very, very sure that you're going to see the result. Treat this meeting about your business money as serious as you will be meeting with the most important customer or investor. Whether you do it on weekly or every 2 weeks or monthly, being consistent is the key to always knowing your numbers in real time, especially as you deal with complexities of digital economy. So part of my final thoughts, I want you to remember that this is like a kind of deep truth. Being smart with your money isn't a punishment. It is actually the ticket to freedom in business, especially in the digital economy. It is basically what allow you to build a business and the life of your dream. If you give the power to take the smart risks, create new things without too much worry, and actually give you like a kind of ultimately um, giving you an avenue for you to achieve a long-lasting impact on your businesses. So we are able to discuss a lot, um, and I believe that from this session, at least you have learned something regarding the aspect of financial discipline. Um, I'm using this opportunity to thank you very much for your valuable time, your close attention, and your thoughtful participation throughout these sessions. We have explored a clear plan for long-term business success, and I truly hope you leave this meeting not just with more knowledge, but also with the practical tool to build business that are more lasting, more disciplined, and ultimately stronger, ready to succeed in the digital economy. Thank you very much.
Thank you very much, sir. Thank you for this wonderful and educative session. This is what everyone actually needs. And if we put what we've learned into practice, we are really going to sustain our businesses. We are going to be moving in the right direction. For me, I have key takeaways. The first is always separate your accounts, separate your finances. Your personal money is different from your business money, and don't mix them. Then the next is always review your earnings, check your expenses, and cut unnecessary things. Avoid anything that will attract unnecessary costs. And then you should be consistent. Be consistent. Don't celebrate so early. Don't just start withdrawing from your profits, from your first time profits. Keep investing using that profit. Thank you very much, sir, for this insightful session. We should kindly react if you enjoy this session. React with your favorite emoji, please. Yes, and thank you all for your coordination, for your cooperation. I can see that we try as much as possible to abide by the rules. Everyone should mute his mic, and if your video is on, please kindly disable it. I can see somebody's video on. Mr. Inua, please kindly disable your video. Mr. Inua Adamu. So now we are going to move directly to the question and answer session. And we are going to start with those that raise their hands. If you have any question, feel free to raise your hand, or you drop it in the chat box, please. So if you have any question, you can put it inside the chat box, or you raise your hand so we call you accordingly. And kindly wait for your time before you unmute and talk. So immediately it is your turn, I will call your name, you unmute your mic and ask your question briefly. Thank you very much. And if you don't have any question, please kindly lower your hands. So I will be dropping the attendance link right now in the chat box. Ensure to fill it before the end of the session. So we are starting with Mr. Yusuf Ladan. I can see your hand is raised. Kindly mute your mic, kindly unmute, enable your mic and ask your question in 30 seconds. Mr. Yusuf Ladan, are you with us? Is Mr. Yusuf Ladan on the meeting? Okay, so we move to the next person, Mr. Inua Adamu. Kindly disable your video and ask your question. Mr. Inua Adamu.
Hello?
We can hear you, but it's some disturbances.
Okay. I hope I'm audible now. Right?
Not fine.
Can you hear me? So, my
Thank you,
question
Mr.
here is it's not really a
Who
question
is talking? Mr.
because
Yusuf Ladan.
yeah, it's me, Yusuf Laden speaking. Can I proceed? Hello? Can I proceed? Hello?
Yeah, you can talk. We are hearing you.
Okay. Abin da za ka yi kan ba za ka buge shi. So, my question here, even though my question it's, I the issue is I arrived late, but towards the end of the presentation, I've had something very important, which is about separating business and personal accounts. So I what I want right now is if the presenter could the shepherd could review a bit on what he has discussed from the beginning of the presentation, because many of us
Mr.
have
Anito,
late.
I don't know if you can hear him, but I can't really hear him from this side.
The same thing here. I don't know. Maybe he can drop the question in the chat.
Yes, just
Which is having
Mr.
issue with
Yusuf,
his mic.
kindly mute
What I
your
can.
It's
mic
okay.
and drop the
Okay.
question.
Okay. I write
Can
it down.
drop it
Yes,
in the
and
chat.
just drop your question in the chat box. Please, others should mute
Right.
their mic so that you can hear the person asking the question. So
Okay.
we are
Next.
moving to Mr. Inua Adamu. Please unmute your mic and ask your question in 30 seconds. Mr. Inua Adamu. Mr. Inua Adamu. Unmute your mic, please. Okay, let's move to the next person. Mr. Umar Abdullahi Lawal, if you are with us, kindly unmute and ask your question.
Good morning, ma. Good morning, sir.
Good
Morning.
morning.
So maybe my own is not a question, but I want to know how can I invest like the what they call it, maybe it's online investment, like shares. They tell it the cost they say it, maybe shares. You understand my question? If I want to invest like for Dangote's Mint or something company.
Okay, please,
Hello.
before we proceed, I would like us to limit our questions to what we discussed during the session. So let's
Yes,
ask questions that are relevant to the session, please.
yes, ma, but I don't know whether he's talk about it. But the shares is important for us, like for in digital era now. So am I audible?
Okay, thank you, Mr. Aminu.
All right.
Hello?
So
Maybe it's
I
network.
before
Hello?
believe this is
hello,
an
this
entirely different topic.
Hello,
are
Mr.
you with
Zena.
me?
Hello?
Are you with me, please?
Yes, yes. Or maybe it's network. I don't know.
All right. So though this is not also part of what I have covered as part of my session, but there is important thing that I think I can actually give a bit. There is one thing to understand about buying shares. Before buying a share, you are expected to have emergency fund at least 3 to 6 months expenses, zero high interest debt, consistent monthly saving habit. These are some kind of vital things that you need to also consider before you even start buying shares. You look at the emergency fund, like is when I talk about the emergency fund, I mean at least you must have an emergency fund for at least 3 to 6 months of expenses, zero high interest debt, consistent monthly saving habit. If you have this, then you now proceed to go and actually invest. I believe there is a lot of people that are doing classes for all those kind of share investment stuff. You can actually reach out to me. I have a person that can actually guide you through that. Um, maybe later after the session. But this is not part of my topic to discuss.
Thank you very much, sir.
Yeah, yeah.
Please kindly mute your mics. The next person is Mr. Abba Garba. You can unmute and ask your question. Garba, for you to verify-
Good morning to you all.
Good
Good
morning.
morning.
As my question, probably I have running my business since. So the issues is that I don't know how to develop the following of the money because the one that we are utilizing this we used to manage day to day that our need and our activities. So I want the facilitator to guide me on how to save the money apart from the one that I have again in my business. Thank you.
All right. So this is a very good question. Like I said earlier, as part of the key things that we are, please mute your mic. Let's have one house. Abba, you can mute your mic, please, so that we can have one house as I answer your question because the voice is been echoing. So personally, you need to learn the habit of separating business money from the personal money, like I already explained before. This is going to be an immediate fix. You are expected to open a dedicated business account. Stop mixing the sell money and the personal spending. Even a simple account with Today, you can, if there is a lot of digital banks, if you are approached, or maybe you don't have time to go into the conventional bank, you can actually venture into all those kind of digital banking platform that we tend to have. Some of them have what we call online banking. Through that online banking, they can give you access to your account, whereby if you log in, you can also track the activities like the inflow and the outflow of your money. You can have access to that. Um, to not make it complicated, you don't need accounting software. That you can start with a Microsoft Excel or Google Sheet, create three basic columns: debt, money in, sell, money in, out, money out, expenses. This is not going to be something complex. Just be recording them in a worksheet, and then later you can further maybe get a data analyst to analyze the whole data for you if you don't have such expertise. Another important bad thing to understand here is that you need to have maintain a kind of daily cash login. Very, very important. If you don't record it, it didn't happen. Every day you need to have the record of all sales, record all expenses, even if it is 500. That alone picks 60% of financial problem. Later, you can decide to introduce the three account rule into the systems. Like when we are talking about the three account rule, we are talking about the aspect of stabilizing the tracking. Split the money into operational account, that is for running the business, saving account for untouchable. Maybe you can say you can do it this way: operational account, put 70% of and make it dedicated for running the business. Saving account 20%, don't touch the saving account. Personal pay, let's say 10%, that is your own personal salary yourself. You see, sometimes we tend to open a business and we end up we don't end to consider ourselves as well. As you are opening a business, the way you are paying other people as well, you too, you need to also be paying yourself as well. Create a personal salary for yourself out of that particular business that you're running, so that you won't be touching the money that is generated for the business anytime. When you wanted to buy something, you just take from the business and use it. No, it should be good if to say you have your own personal salary that you can always pick from it and do your spending there, so that to avoid touching the main amount that is dedicated for the business. Automate the saving. Very, very important. You can use there's a lot of vital softwares that you can use, like the Piggy Best, Corey Wise. Set a weekly or monthly automation transfer, log saving, a lot of ways. But I believe these are some of the key ways that you can actually adapt to if you wanted to ensure that you actually cope up with the issue that you are actually having in terms of all of that. You can also have a kind of a weekly financial review. Make it like a kind of part of your discipline. Once in a week, every Sunday evening, sit down, analyze the total income, the total expenses, the profit and loss. And then from there, you can begin to ask your question: where did the money leak? What can I cut? Define profit properly, because some people have the problem of even defining the profit. Most business owners think profit is equals to maybe the money in the account. Sometimes you may have large amount in the account, but it is not the profit. We tend to have issues like this. Profit is equals to income minus expenses, please. You can only declare a profit after you remove the expenses. What left is what should be regarded as the profit. Set a simple saving target. Save, maybe you can save like 50,000 monthly, or maybe 20% of the profit, something like that. Um, the problem is not just a kind of lack of money, it is the lack of structure. Once we have the clear detailed track of all what is actually happening in your business, you can be able to cope up with that. I think this is a little I can say regarding the question you asked. Thank you.
Thank you very much, sir.
Thank you, sir. Thank you, sir.
Yes, so you can mute your mic now. So I think there is a similar question on the chat box by Mr. Abdulrahman Abdul Aziz. He
Mm.
is asking of how one can maintain strong financial discipline and avoid impulsive digital spending in the digital era. So I think this one still has to do with you structuring your finances, giving different portions or percentages for what you need to do with that money, and being strict on like maintaining that percent. If you say 10% is for so thing, do not exceed it.
Exactly.
Yes. So I
Mm.
think that has been covered too. So the next person in line is Bala Joseph. You can unmute your mic and ask your question now. Mr. Bala Joseph.
Okay, thank you very much for this section. My question is that on his presentation, he talks about the immediate expansion. Is it in all cases, in every business, that immediate expansion is a problem?
Okay.
That is my question. Yes.
Okay. Thank you. Just mute your mic. We've heard you.
All right. So, Mr. Bala, regarding the question you asked, the hard truth is that most small business don't fail from lack of demand. They fail from expanding too fast without financial control. That is where the issue is coming in. Immediate expansion become dangerous when cash flow is not suitable. Records are not tracked. Profit is not clearly known. Expansion is funded. That is, whenever you are trying to expand your business, you are trying to look at it from the aspect of hope, not data. That is where most of the business tend to crash. So when immediate expansion is the problem, it is a problem if he is doing it in such a way that maybe like by expanding, you can decide to say opening a new branch without knowing the current profit. You started business in location A and the business is doing good there. You do not sit down to calculate your total profit to see whether you are really making profit from that particular business that you're running. You quickly run to another area and go and establish location B. So opening a new branch without knowing the current profit is also part of the problem that we tend to have when it comes to the aspect of expansion. Buying more stock without tracking sales properly is also part of the problem of expansion. Hiring staff without consistent revenue, very, very important place, is also part of the problem we have when it comes to expansion. Spending because business is moving is also part of the problem we have when it comes to expansion. So the emotional expansion is not a strategic. That is also part of the things I know. So we can also look at some key areas when immediate expansion is not a problem. Expansion can be good, but only if it is controlled with what I'm going to list now. Number one, there is need for us to have a clear financial record of at least 2 to 3 months before making expansion. Secondly, there is need for you to know your monthly profit consistently before making expansion. There is also need for you to have a kind of a demand improve, not as assume, before making expansion. Expansion is funded from profit, not capital or loan. Take note, please. Whenever you say you wanted to expand a business and you are taking it from the capital, though sometimes we take loan for expansion, it depends on the nature of the business that you're on. Some take it is a risk. You know, everything that we are doing in this world, we are taking risks. Business is a risk. In part, everything is a risk. So if you think you can bear the risk, some people bear it and it turn out to be successful. Some people do it and it turn out to be a problem to them. Sometimes you may take loan in the name of you are going to expand your business. At the end of the day, it will become a problem to you. You see what happened during the era of COVID-19? The government distribute a lot of money to people, which later so many people keep collecting the money in the name that they will expand their businesses. And we see what happened to them. Some of them up to now, they are battling to settle such kind of amount that they are actually taking during that period. So all this thing is the thing that you need to look up to before you say you are going to make making expansion is good, but you have to look at it from this angle. When is it a problem, and when you can actually adopt and do expansion to your business that does not actually give you a problem. You need to also ask yourself this question: does expanding am I going to expand the business because the money is coming in, or expanding because the profit is consistent and is predictable? I'm always advise people, whenever you come to do expansion in business, don't do expansion because the money is coming in. Do expansion because the profit is consistent and is predictable. Very, very important, please. The real problem behind immediate expansion is some of the things that has to deal with no tracking system, no separation of pound, no defined profit, excitement plus pressure. You know, people started selling, you see money is coming in without sitting down to analyze the profit you are making. Just let me expand my business. No, you need to analyze very well, because sometimes it is not just the matter of coming of the money, it is the matter of how you tend to actually analyze and look at it from the angle of your profit that you're generating in the process of running such kind of activities. I believe this little has cleared the air regarding when business should be expanded and when business should actually maintain a status quo until when it reaches a certain level that is due for making such kind of expansion. Regarding to your question, Bala, thank you.
Thank you very much, sir. I think
Well explained, sir. Thank you.
yes, thank you, Mr. Bala Joseph. Thank you, Mr. Aminu. So let's know when it is necessary to expand. You should have control over the small scale business or whatever you are operating before you now expand to the larger scale. If you cannot control the small scale, you definitely might not be able to control the large. So the next person is Mr. Muhammad Haruna. Kindly unmute your mic and speak. Please, Mr. Yusuf Buhari, remain muted. I've been muting you several times during this meeting. Kindly mute your mic and wait for your turn. So, Mr. Muhammad, sorry, are you with us?
After you finish, after this person finish, please.
Please, you have to raise your hand and follow the line. Others are waiting.
Okay. Good morning, ma'am.
Just
Good morning,
raise your
sir.
hand before you come. Morning.
Thank you for the wonderful presentation. We really appreciate. So my question here is that, sir, as a small business owner, like what are the quick strategies in which you can manage your finances? Let's say like your income and the profit. What are the quick strategies you can implement to manage it, your finances as a small business owner?
Okay. So for a small business owner, when it comes to the aspect of managing finance, I always refer back to what we already discussed in the session, you know, and I will keep constantly referring you back to it because it's part of the core strategy. Separation of money. Rule number one, part of the strategy. Rule number one is you need to separate the money. Stop mixing funds. One account for business, one account for personal use. This is the first strategy, first winning strategy for a small business owner. You need to separate where you actually store the money. The business own has to be in one account, and then your own personal also has to be one account. Secondly, for the aspect of tracking money daily as part of the strategies, like I said, I think I give similar answer to one of you that asked these questions. You can use a Google Sheet, you can use Microsoft Excel for you to track the aspect of record that you are actually regard to yourselves in the business, like the sales, the money in, the expenses. That is why we tend to talk about the money out. Even though now we have a spreadsheet live that you can use for you to track all those kind of things, even with your mobile phone, not necessarily with the system. It is something that you can do with your mobile phone. If to say you are not even there, let's say you are not the one running the business, you are not the one running the business by yourself, you have other people in different locations, you can just create a live sheet, let all of them be recording the in and the out of the money. Let's say you have like 2 branches, or you are operating in maybe different states, you can actually consider something like that. If it is not recorded, it is a loss, please. You can only be able to record and say that your business is healthy, you are doing well financially, when it is recorded and you measure the matrices. There is also need for you to use 70-20-10 rule. 70-20-10 rule. For every income, it should be stipulated immediately. 70% for business operation, 20% for saving, 10% for personal salary. I talk about this. It's very, very important so as to control what should actually goes into the business, what you should save, and how can you be able to manage your day-to-day expenses as a business owner. Dedicate 70% for business operation, 20% for saving, 10% for personal salary. This is going to pose a discipline automatically toward the aspect of managing your finance. Like I already explained, some of you are laughing. Pay yourself a fixed salary is also part of the strategy. Yes, pay yourself a fixed salary. Even though you owe the business, it is your business. Set a fixed monthly amount. Stop taking random money anytime. Some of us have that habit. When I'm selling this, is doing good. I have one plan for me to buy this thing. Let me just move from the business money and buy it. Before you know, you start to lose the main capital, not to talk of what? The profit that you are generating. So pay yourself a fixed salary. Fix a monthly amount that you should actually be spending as part of your salary from that business that you're actually doing. Control every expenses. Small leakage destroy businesses. Set a daily or weekly spending limit. Approve rule. Do not really need this. Anything that you know that you do not need it, don't put it into that business, please. That is why in the beginning of my presentation, I mentioned it countless times. There is need for us to separate between the want and the need. If you can be able to separate between the want and the need, definitely you will have a successful business there. Because sometimes people are just going after, business owners tend to go after the want, not the need. Anything, when we are talking about the aspect of the need, we are talking the essential things that has to be there for the successful operation of the business. When we are talking about the want, it is something that you need outside the business. It is not something that is not part of the core vital stuff that will contribute to the success of running that particular business. So if you are differentiating between the two, you are also maintaining a very good financial habit. Save automatically. Don't trust willpower. Like I said, there is a lot of vital software that you can use in terms of saving. PG Best, Corey-wise, all of them, that we have a lot of financial platform that you can use for such kind of stuff like that. Do weekly money check. This is very important. As a small business owner, there is need for you to do a weekly money check-in. Every week, total income, total expenses, what is left, analyze, so that every week you know the total profit you generated. If you are doing that, it is also part of the things. Don't expand too fast because the business is doing good. As a small business owner, don't run fast to expand your business. Stabilize it before you grow it. Take note, please. You are only when you know your profit is clearly, the cash flow is suitable, then you can proceed to do the expansion. Keep emergency buffers in business. Always keep at least let's say 1 to 2 month business expensive. This is to protect yourself against shocks, because like I said before, business is a risk, and sometimes for some of the things that they were coming to us, we are not even, something may come that we may not even plan. You don't know that this thing is coming, and just coming accidentally. Think like a system, not emotion. As a business owner, you need to think like a system, not emotion. Most small business owner mistake come from one of those key things: excitement, pressure to grow, no structure. These are some of the key things that tend to kill businesses: excitement, pressure to grow, and no structure. Teach yourself this mindset in terms of this. Business money is not my money. I pay myself from the business. The moment you teach yourself this, you are done. Sometimes we send requests to the people that we are thinking that no matter what, they have the money. But at the end of the day, they will tell us they don't have money. That's why, as for me, when I request money from you, you did not give me, I will not blame you. Even though I know you have the money, because it depends on what money do we have there. You can assess somebody to take his own capital and give you as a loan, for example. It's not done that way. You can't expect somebody to take his own personal saving and give you. It's not done that way. We can only use to give people loan from the profit that we get. But at least no matter what and whatever we do, let the production be stabilized. That is only when we can be able to achieve our desired goal. I believe I have said a lot. I don't want to block the time for others to ask the question. So always make it and teach yourself this mindset. Business money is not my money. I pay myself from the businesses. Thank you.
Yes, sir. Thank you very much, sir. Thank you very much for this highlight. Before we move on to the next person, please, let's be serious and willing to learn and apply what we've learned. A lot of people have been asking about attendance link right from the beginning of the session, and others used to forward the attendance link from this meeting to the WhatsApp group, which is very wrong. We are over 800 people in that group, but only a few above 100 used to join the sessions. And some join immediately to sign attendance and leave, which is not right. I think this workshop is for us to learn, to apply it, not just to sign attendance and get certificate. So the few that are willing to learn should fill the attendance form during the meeting and just leave it, please. Refrain from forwarding it to the WhatsApp group, because I will be having 101 people attending the meeting and I will have about 200 people filling the attendance. So kindly note that I have another way of taking my attendance during the meeting apart from the link. So I will check and see those that did not actually join the meeting and I will find a way of removing them. So thank you very much. Those that are complaining that the link is not going through, keep trying. It has to be from your network. So the next person, I can see that some have dropped their hands and we are having new people. So before we move to the people that raise their hands, I have a question on the chat box waiting. So the person started by appreciating your clear explanation of financial discipline. The question goes like this: why should we avoid estimate figures in our budget? So Mr. Aminu,
You say, please, can you
Khalid
come over?
Abubakar Bello. Mr. Khalid Abubakar Bello is asking the reason why they should avoid estimated figures in their budget.
Okay. So thank you for the question. One of the reasons why we should basically avoid estimated figures in budget. It is. I will start by answering the question from the angle of looking at the budget itself. A budget is basically built roughly or emotional estimate. That is basically one of the fastest way a small business lose control of money. So here is why relying on estimated figures data is a very, very big risk. Yes, it is a risk. Number one, from my own perspective, it creates a kind of false sense of profit. If the guesses, expenses, or revenue, definitely there has to be an issue that may have to deal with many may think I made a profit, but in reality, costs were higher than they expected. So the result should be he spent money that isn't actually a profit, meaning that you spend from the capital. Secondly, it lead to overspending. Example, in your estimation of, let's say in your monthly estimation, you estimated that the expenses is going to be 100,000 and the actual expenses is 150. That 50,000 gap become debt. It become cash shortage. It become business instability. Thirdly, it destroy planning accuracy. Budget is equals to decision-making tool. If numbers are wrong, pricing become wrong. Stock planning become wrong. Expansion decision become dangerous. You can't plan with inaccurate data. Fourth one is it hide financial leakage. Estimated budget don't show daily unnecessary spending. Estimated budget don't show hidden operational costs. Estimated budget has to deal with something I categorize as small repeated offenses. Those small leaks are what kill the cash flow in business. It can also be looked at it from the angle that we can say it encourages emotional decision when the numbers are not real. The decisions are based on feelings. Business is moving. That is what we just assume. We are just assuming. There was no pact, no clear pact to back the evidences that to know whether that business is moving or is not moving. That is basically what will lead to premature expansion, poor investment in business. It can also break cash flow control. If you estimate the cash flow, ordinarily the cash flow depends on timing and accuracy. So estimated figure cannot show you when the money is coming, when the money is going. So you may be run out of cash even when the sales are good. Can you see some of the reasons? So what you should teach yourself instead is that don't say you should avoid estimate figures completely, but rather use estimate only as a starting point, but always replace them with the real data. That is just what I will have to say. So the good practice and the good approach for you to do it entails start with estimate if necessarily, track the actual numbers daily, review weekly, adjust the budget based on reality. After 1 to 2 months, budget become accurate and then decision becomes smarter. Thank you very much.
Thank you very much, sir. So the next person is, I think we just finished with Mr. Khalid Abubakar, right? Okay. Mr. Khalid Abubakar Bello, unmute your mic and ask your question. Okay. Yes, sir. So the next person is Mr. Muhammad Ahmad. Mr. Muhammad Ahmad, are you with us?
Yes, ma'am. Good morning, everyone. Am I audible?
Yeah.
Thank you so much, sir, for this wonderful presentation. My question goes like this, sir. What are the strategies, or should say, tips that someone can follow when having a lot of challenges in calculating the business profit and costs?
Okay.
And also, let's say there is so much expenses in the business that are higher than the profit. What are the tips that can reduce the costs, I mean the expenses, and increase the profit?
All right. So regarding the question you asked, I will divide it into two. I will answer the first question and I will go with the second question later. So the goal is to give you a kind of practical rules that you can follow immediately for you to have calculate all those matrices correctly. You need to start with the only formula that matters. You don't have to go into complex calculation at the start place. Profit is equal to selling price minus cost of goods plus expenses plus labor. Take note of this, please. I will repeat again. Profit is equal to selling price minus cost of goods plus expenses plus labor. If the result is negative, then definitely you are subsidizing the customers with your own money. I repeat myself. Profit is equal to selling price minus cost of goods plus expenses plus labor. If you calculate it and you get again negative value, definitely you are subsidizing the customers with your own money. Secondly, you need to calculate the real cost. Most people underestimate it, but it's very important. That is why I love the question. You must include everything, not just buying price, cost of good, stock and material, transport and logistic, the rent, the electricity, the data you use in managing your social media handle, the staff salaries, even the helpers, not the top management staffs, your own time. Very important. You also need to fix all of that. So if you ignore any of those, pricing becomes very, very wrong. Another important thing that I will say here is that never price emotionally. Many small business price like this. Let me reduce the price so customer will buy. It's not done that way, please. Instead, price must cover costs plus profit or don't sell it. That's just it. There are some people that they can lower the value of their goods and services just because of they have much competitors in order to have large number of customers. What matters the most in that aspect is that were you able to sell that particular good or services? Were you able to recover the money you used in buying that particular good or services? It matters the most. At least, even if to say there was no profit, the money you can't sell something beyond how much you buy it now. You can't sell it beyond that. So always when it comes to that, you need to price in a very good way. Based on that, price, like I said earlier, the price must cover. It must cover the cost plus profit. If the price does not cover the cost plus the profit, don't sell, please. Yeah, by doing that, you are not doing business. Yes. Don't go and kill it. Don't. Thank you, my brother, for posting that. That's what is to kill poultry. Exactly. That's the exact what is happening. So, no matter what you do in business, if you wanted to succeed, I repeat myself again, price must cover cost plus profit. If the cost is not cover chocolate or profit, don't sell. If you sell, you're on your own. So
Sir.
yes.
Okay, sorry. Thank you, sir, for this wonderful. So, if to say that like someone that is in business, that the business sometimes, let's say, in fact of the quarters of the season has changed. Let's say like the food store. Sometimes you can see that they has no profit in some quarters of the year. Let's say in the January to March, so the profit is not that too much. So, sir, does this rule that you tell us, that say 70% should be in operation, 20% should be in saving, while 10% should be in the personal salaries, let's say, does this should also apply, or it can change in some businesses?
No matter what, it should apply, please. Provided that you want to continue sustaining your business, it should be applied. Yeah.
Thank you, sir. I think before we move on, you should kindly repeat the formula you gave for profit. I can see some people requesting for that.
All right. So what I basically said that if you are calculating the profit is equals to selling price. That is the amount that you are selling the good or services minus cost price of good plus expenses plus labor. You have to remove all of that. That is where you get the profit, the exact profit. Cost of good plus expenses plus labor. You have to remove all these three. Cost of good, expenses plus labor. Profit is equal to selling price minus cost of goods plus expenses plus labor. Yes,
Thank you very much, sir. So after you do the calculation, what you have left is your profit.
exactly.
Thank you, sir. So I can see Mr. Mujahid Hashim raising his hand. Before Mr. Mujahid Hashim unmute, please, there are some few people that really want to connect with you. So they've been requesting on how to connect with you. They want to learn one or two things. I don't know what you have to say about that.
Yeah, actually, I will drop my social media handle along with my contacts. One important thing, I normally tend to connect people via emails.
Oh,
If you are coming, because always my DM is chalk, either in WhatsApp, Facebook is chalk. If you need my attention, just send me an email, please. I will try to attend to it. I will drop my email in case you have anything to ask.
okay, thank you very much, sir. So I hope those requesting for how to connect with Mr. Aminu Idris had this. So he said you should contact him via email, not via DM, please. So the next person is Mr. Mujahid Hashim. Kindly unmute and ask your question. Mr. Mujahid Hashim.
Hello, good morning, sir.
Yes, yes, Mujahid.
Good morning,
Very
sir.
much.
Thank you for this wonderful presentation. I really appreciate it. Thank you, sir. So my question is, what is one financial discipline principle do you think most startup ignores it until failure forces them to correct it?
You say?
What financial discipline most of startup businesses ignores it until when failures come, then they later try to make correction.
Until when
When failures come,
failures.
force them to correct that mistake. Usually,
Okay. So regarding the start of the what I basically tend to tell people, especially most of the start of that I know, the major problem is that they don't separate the money and they don't track properly. That's the major issue. The one of the biggest mistake that the startup made is mixing the money. They used to mix the money, your personal money plus your business money, all of them in the same place. This is why the protocol matters so much. Most startup mix business money with personal money. They don't track daily cash flows. They assume money in account is equals to profit. By the end of the time, they'll begin to realize the mistake. At that time, cash is gone, debt affair, and grow become impossible. So what is the protocol there? The protocol is very, very simple. One thing that I always used to advise is that you need to adopt a simple discipline system. Separation of account, very, very important. Most startups face the challenges. Separation of account is something that is not negotiable for every startup. Tracking of every naira is also very, very important. And like I already said, pay yourself a fixed salary. I keep repeating myself. It's also one of the mistakes that startups are making. The moment you start doing the business is producing profit. Try to pick something to yourself. Make it in such a way that that thing should be the maximum amount you can spend from the profit that you paid yourself monthly from your business. I don't know whether you get. Know your real profit weekly. Don't just guess, please. Guess is not feeling. Make sure that the profit is calculated correctly. Income minus all expenses from labor plus labor. Most startups ignore it because they think they are still small. They can track it in head. Money is still coming in until when expenses quietly grow, leakage increases. They suddenly begin to run out of cash. That's when they begin to face the problems. So usually business is the struggle. We all know that. So you always look up into them. So the biggest financial mistake is not lack of money. It is the lack of visibility and separations. Once you don't have control of your cash flow, your business is already at risk. So in simple analogy, running a business without separating and tracking money is like running a company blindfolded. Just like somebody takes something and blindfolded you. You don't know where you are going. You'll be doing like this. You don't have direction. So you may move past, but you will not see what crash may come along the way. At the end of the road, at the end of the day, it may be a car that will come to crash you there. You don't know. So that is basically the answer that I have regarding your question.
Thank you very much, sir. As we approach the end of the meeting, ensure you sign your attendance. We are taking the last 3 people that raised their hands and we will move on. So I see some people in the chat, in the in-call message, asking of how they can structure their business, how they can start a business. And I believe if you have checked the timetable sent, we are going to cover that in the next 2 sessions. So we have 2 sessions remaining, afternoon and evening. We are going to have experienced facilitators discuss on that mainly, how to start your business and how you grow it. So just kindly ensure you join the next 2 sessions so as to complete the experience. Thank you. So we are taking Mr. Yahaya Ya'u. You have 30 seconds to summarize what you have to ask. Mr. Yahaya Ya'u, if you are together with us, kindly unmute and ask your question. Yahaya Ya'u? Okay, quickly we are moving to the next person, Mr. Farouk Umar. If you are together with us, unmute and ask your question. Mr. Farouk Umar, you have 30 seconds to do so. Mr. Farouk Umar? Okay, moving to the last person. Sorry, I'm a bit, I'm rushing because we are about to end the meeting. Mr. Abdullahi Nura Sayyedi, if you are with us, kindly unmute and ask your question.
Assalamu alaikum. Good morning, everyone.
Yes, I'm with you.
Salam, good
Hello.
morning.
Thank you so much for the presentation.
Yeah.
And my question is that I'm running a small business. I have a loan from the bank. So what I did is that every month I used to pay some portion of that loan that I required from the bank. So anytime I made a sale, I used to divide my profit into 3 and take one as my personal need, then the second portion to the what saving for paying the loan for every month, then the third portion of the profit goes to the what I reinvest it into my normal capital. So am I in a good track, or is there anything that I need to correct on this? Thank you so much.
You are actually doing a very, very good thing. As regard to this, I don't think there is anything to correct. The only thing that what advice I may give is that you should like a kind of do the splitting in the more comprehensive model, like 50 to 60% of the good on services slash maybe reinvestment, 15 to 20% of loan repayment, 10 to 15 expenses, 5 to 10% of profit, only if it is available. So if you make this adjustment, I think you are good to go. If your loan is not fully planned in your cash flow, your business is not profitable yet. So as long as like I love the way you do the breakdown. If you are actually coming to, even if you are taking a loan for you to start a business, yes, it's good, but make sure that as long as it is part of the cash flow, that there is no any issue. And for the rest of the other things that you are actually putting aside, you're on the right track and you are doing the right thing. All the best.
Okay, thank you so much, sir. Thank you so much for the advice. Thank you.
Oh God.